Russ and Ryan, welcome to the show today.
Thank you very much, Michael. Thanks for having us.
Yeah, definitely.
Great to see you guys here. Really excited that you're here with me today. Great success story. We want to understand kind of how you did it. But before we get into it, let's get a little backstory. I want to know from you, Russ, kind of what were you doing before you got into real estate? And Ryan, I got the same question for you. What was going on, and why did you start getting in real estate?
Well, I mean, first off, I guess the long of the short story, if there's such a thing, is I was interested in ways to create generational wealth for my family, right? So I began with the process of reading every book I could on equities investing in the stock market, and I've got a bookshelf full of probably 60 to 70 books that I've read, understanding how to evaluate stocks, et cetera. I started doing that and really enjoyed it. And then one day, I don't know why, what happened. I picked up, the Rich Dad Poor Dad book, everybody's favorite purple book, right? Started reading that, thought, man, this is interesting. Then before you know it, I filled up a bookshelf full of real estate books with even yours as well, Michael, the famous yellow book. Um, Started with single family, found a smoking deal with a former wife of an uncle of mine. Bought that and thought, hey, I'm a real estate investor. This is going good now. I've got a tenant that's been in there forever. She was easy as can be. Well, one day, Ryan and I, we worked together for the same company, and he sends me this text message with this listing for a vacant lot in town. And I'd already, from reading your books and a couple others, gotten the mindset that, hey, I want to look into commercial, but I just don't know where to start, right? He sends me this a lot, and he says, hey, this might be something that interests you. And I thought, I'd really rather started spitballing everything that I learned from the books, right? I'd really rather do this and have the opportunity to turn a building around, et cetera, and then refinance it and enjoy the wealth of it, right? And he said, well, that's exactly what I just did on the building that I bought a couple years ago. And I thought, that's interesting. And then before you know it, it's, hey, you want to try to partner on something? Well, to shorten that story even more, we ended up doing that. We found a commercial building locally in our area that we bought that was a home run right from the commercial standpoint. We ended up buying it, doing a rehab on it, talking to a tenant that was next to us that we knew had been acquired by another company, and that those companies might want to consolidate. So negotiated with their leadership about tearing down some fences, adding some stabilized material, adding 1,200 square feet to the interior of the building for office spaces, et cetera. And boom, next thing I know, we've signed a contract and we've got this Fortune 1000 tenant inside of our building. It's like, oh, wow, now we've done this. The next piece was, hey, we've got an asset that's a single tenant asset. Well, it's going great. It's going to be a home run when we refinance it, et cetera. The value of it has just gone through the roof. We've done well, but I'd like to look at something more multi-tenanted, right? So if we lose a tenant, I'm not sitting with a building that doesn't have a tenant in it. And he thought, well, I wonder how we do that. I'd been listening to your podcast, Michael. I'd read your book. I listened to a lot of podcasts as well, outside of yours. And I thought, well, hey, I know that this guy, Michael Blanc, has this teaching program, for multifamily. And Ryan, as anybody should be, was skeptical, right? Oh, is this really something that we should venture into? Is this a scam, et cetera? So I did some more digging and decided, there's too many people that I'm coming across that Michael Blanc can't pay off to say, hey, this is a good deal. That I decided, okay, I'll make the phone call. So I made the phone call to your line, started talking with a gentleman there. I can't remember his name. It's been too long now. And then Ryan and I jumped on the horn with him as well. And before you knew it, we were signing up and rocking and rolling. And now here we are talking with you.
Yeah,
So I'll let Ryan go from there.
well, I think he was an FBI or a former FBI negotiator, or so yeah, he was a sweet talker too. But I was already sold before then, so.
So what do you guys do? What do you do? What's your day job? What do you guys do?
So for me, I'll start first and I'll let Ryan go. But I work in the construction side of the chemical industry. So I manage contractors, manage contractor safety, construction safety. The largest project I'd done was I'd managed a $100 million new investment for our company where we built a new ammonia generating facility as well as the outside infrastructure for it. previously I've managed contractor companies, on-site maintenance contracts up to over 800 people that were indirectly responded to me. So I've got a construction slash contractor management background in the chemical industry.
Yep. And on my side, my background's electrical engineering. So undergrad, for double E. So I've worked for the same company my whole career for 14 years. Starting in design, doing the maintenance side of things, all for chemical manufacturing, getting into asset management. Got my MBA along the way from UNC Chapel Hill, which has proven invaluable for this kind of endeavor as well. But still have that job. So right now, I manage the power distribution for the facility down here in Southeast Texas. But yeah, it's interesting, and I'm sure we'll get to it. But as far as burning the candle at both ends, it gets very, very fun, but very rewarding. It's challenging, but there's a lot of upside, and I'm sure we'll get to it.
Brian, what was your real estate background before
Yeah.
you got to us in this deal?
Sure. So, and it's about 2019. So my MBA was, I think I got that in 2015. It wasn't until 2019 when I just had this epiphany. I think I interviewed for a job I didn't get internally. And I'm like, man, I guess I can't just apply myself to something, while working for somebody else and expect that, I'm in control of my own destiny. So, decided to grab control of that and, and the side be able to try to find something that would enable me to give back at a larger scale than otherwise possible. So for me, it was real estate was the obvious choice. I knew the value there. I took a leap of faith and bought a property, an office building, 6,000 square foot office building from a family. It was family built, family owned, operated architecture company that was being acquired, and they needed to get rid of it. So I knew the price was right, but I also knew that it was, twice the price of my house that I was living in, and my mortgage payments were going to essentially triple. And while it could be multi-tenant, you could form it that way. I kind of knew it'd be single tenant, and it was grinding for the next however long it took to get somebody in there. That ended up working out, and that kind of that was the launch pad. Russ caught wind of that, and then we started looking for local deals, getting involved with those deals. And he mentioned, the office warehouse building that we acquired shortly thereafter. And then, eventually you run out of capital, to be honest with you, right? The banks, they're great. You have good relationships with the banks if you prove you can pay off the debts and make the payments and carry the insurances that make them happy. But inevitably, you'll run out of your own capital to invest. And that's when when your program came into play. And I think that's where we're at right now, and we'll get to our first deal. But
There's
yeah,
a lot of people who spend years kind of investing in single family houses. Now, you guys did start small, but you kind of quickly realized that you needed to scale up. Why was that? What was that aha for you guys? Like, we can't do this another 10 years. It's going to take too long. How did that come about?
so I mean, I think it was very quickly. I mean, I never really messed with residential, right? I skipped straight to commercial just because, for me and all the books I was reading and just knowing, hearing the horror stories of dealing with the residents of the single, this house that you're renting them, it's their livelihood, right? They're very emotionally involved with that. So commercial was always the path as far as that goes, because it's you're usually dealing with businesses if it's not multifamily, but in the multifamily aspect, there's just more of those people, right? You have economy of scale there. Um, but as far as not first going into single family and realizing that, hey, one AC unit breaks, I've lost all my profit for the year for that property. Skipping that step and going to commercial, it quickly became apparent, one, for, like I mentioned, the capital constraints, right? But two, um, not that you can't have a syndication that involves a building with a single tenant, but our approach or the properties available in our area down here where we had relationships with the bank and our inner circle local to our town down here, it enabled that. It just, we knew there was higher risk, so better to expand and scale up and get into what we did with storage or in multifamily when the market kind of turned around for us.
Interesting. Russ, why did you and Ryan decide to partner with each other? And then also, how are you splitting up your roles?
I mean, we were actually on that ammonia project that I mentioned earlier, and previously had known each other because my father had worked with Ryan in the electrical design side of things out there at the chemical plant. Um, so we had a friendship that had already kind of been built. We knew each other very well, and it was kind of a seamless no brainer whenever it was brought to mind to partner together. Now, to answer the other half of your question, what I guess you asked what we do amongst the group, like who handles what. Yeah, so I'm more the deal finder of the group, essentially that communicates with the brokers and has those develops those relationships, makes those calls, the emails, et cetera, the searching for the properties, the underwriting piece as well. And Ryan's kind of on the underwriting side. He's my backstop, right? So after I find something like, hey, this is starting to look okay, I double check it again. And I send it to him, right? So because he's going to be the one that says like, hey, yeah, you're not missing anything. This may be something that we can send an offer in on. So he helps me with that side of it, and I'll let Ryan kind of talk about what everything he does because it's all the stuff that I don't want to do. So.
Well, Russ, I mean, you failed to mention the nonstop broker calls that you field. Um, and you being the front man there and taking the brunt of that baseball bat, right? Which is a big deal. So, you have the deals funneling in, you're doing the quick analysis, doing a deeper dive when it passes the 10-minute uh check, and then, by the time it lands with me, it's a pretty solid deal that we're probably gonna provide an LOI with. But yeah, in parallel of him doing the deal finding, I'm more of the capital raiser, investor relations. I handle the accounting side, so I work with the CPA, the bookkeeping. I handle a lot of the background, the technology stuff, um, and then yeah, marketing to an extent. And Russ kind of, another role he has is more of the asset manager role. So he's dealing with the construction side, and given his background, as well as property managers and property management, he holds them accountable and gets results on the properties that we do have, because that's just as important as acquiring them.
So what I do like about this from the beginning, you guys structured your partnership in the sense that you have clear accountability. In other words, there's no shared accountability. Russ is basically essentially deal flow, and Ryan, you are essentially capital finding. Now, obviously, Russ probably needs to know how to raise capital. He's probably helping you, but you are accountable in a day for raising capital. And I find that those partnerships work the best when you have complementary skill sets, and someone focused more on deal finding and the other one more focused more on capital raising. So I like that. And this is one of the reasons it's worked so far. Plus, you guys have known each other for a long time as well. That helps as well. Why in the beginning did you guys decide to start working with us? Because there's a lot of people who, well, first, most don't ever get started. They're like, no, I can't do this. I there's no way. And then there's another group of people who simply just start doing it on their own. And you guys decided, no, we're going to start working with us and some, experienced syndicators. What led you to that conclusion?
And I'll go ahead and jump in. For me personally, it wasn't a necessarily a fear of failure. It was just understanding that this was a different level in the real estate game than we had the tools essentially to tackle. Right? I mean, you can read all the books you want, but when it comes down to your program and knowing, okay, we have a mentor on our side, we have training prior to the mentor, where we learn a lot of the basics. We understand the underwriting, that's provided to us. Our mentor was Barry, and we were on the horn with him at least once a week. And once we started digging at deals, it was almost daily in some capacity. I knew that we needed to find a tool and a process to help us with getting to that next step. It wasn't something that I wanted to dive off to and say, raise money from a bunch of people, and then all of a sudden not have every bit of knowledge that I could possibly have at my in my tool belt, for lack of better words, to be successful, right? So I said it one time, and Ryan said, "Well, failure's good." I said, "Failure's not an option for me." And he said, "Well, sometimes failure's good because you learn." Like, no, it's not good, Ryan. It's failure's not an option when we're dealing with people's money. So he's probably laughing at me, thinking, "Man, I can't believe he said that." But
Yeah, I never
that
said
was
that with
just
other people's money, but
yeah. Yeah, so I did the research. I not only your program, Michael, I looked at others, right? To be fair, I looked at a bunch, and I got on the horn with a lot of different forums and started asking people, digging around on LinkedIn, and I came up with several people that have been through your program. I found other people that had gone through other people's programs I was looking at that didn't have quite the success, didn't quite have the personalization to it, where they didn't have direct access to their mentor per se. And that piece of it was the biggest piece to me. Okay, I want to deal with somebody that is experienced in making these deals, that understands, like, hey, this is what you need to do on the legal side. You need to make sure you have this type of attorney, that all these things are in place. Hey, your underwriting's good. No, it's not good. I need somebody to tell me that, so I could understand the nuances of jumping into something at such a different level than what we've done with just a single, commercial building or a residential house, right? So that was kind of the piece of it for me.
Yeah. Now,
I'm,
Ryan,
and I have a lot to say on this one, Michael, but I'll keep it to the important ones. I think, where your program really stuck out for me was the accountability aspect. So, I mean, we had, well, Barry, is a mentor. We had to reach out to him, right? But there's an aspect of the coursework where you have to hit certain milestones before you do become Dealmaker certified, and there's somebody from your team always pushing you, and who you have to answer for, right, to maintain the guarantee that you will do a deal within a year, right? Or you can continue on for as long as you're putting in the calories, which is arguably one of the bigger things, right? Is putting in the time. And you can always build your network. If you feel like you don't have people you can raise capital from, or you don't know where to start, if you're putting your energy towards it and the time towards it, it'll pay off. It's like you said, some people aren't willing to take that step, right?
how did you guys have full-time jobs, right? You're not part-time. And they're probably pretty demanding if you're in charge of these kind
Right.
of. How did you both make the time for this?
Yeah. Just I was already trying to wake up an hour early just to get a workout in, because you got it. If anybody has kids, I mean, it's crazy at night when you get home from work. So there's really no guarantee that, one, you'll have the energy, or two, you'll have the time, because you do want to give them some attention, right? Before they get too old. So it's staying up late. It's maybe not going out to lunch at work, and instead, doing some coursework or making some phone calls. It's waking up even earlier and just being a little bit more tired, maybe for the time being. I mean, I know the people that I work with or interact with, they know that Friday afternoon they're going to get a flurry of Ryan coming their way. Like they know that I'm going to be calling, that emails are going to be flying, and usually I have to wait the weekend then for a response, because I mean, a lot of people kind of give up work after the morning of Friday. And then I'll write emails during the weekend, and have them on a delayed send for random times on Monday, just so they catch attention and they don't get buried, in emails over the weekend. But it's not easy. It's definitely additional work, right? But it's a safety net at the same time.
And what does that activity look like, Russ? So, Ryan, when you're saying there's a certain amount of accountability, there's a good point. What work are you doing? And we'll talk about the first deal here in a
Yep.
second, because it led to a first deal, but you don't just get there and all of a sudden this deal falls in your lap. What activities, Russ, are you guys doing on a daily, weekly basis that when you do it often enough and long enough, it leads to the outcome?
I mean, for me, I'm constantly making phone calls to brokers. I'm constantly emailing them. I mean, you can get their attention just by going on something as simple as Crexy, or if you dare to go on LoopNet, you can do that as well. But they get notifications when you put in any kind of a request for information, right? For an offering memorandum or any kind of a due diligence materials that may not be readily available on the website. So I started with, picking up and making a list, and it was early in the morning. I work out early in the morning too, and then after that, before I go to work, I try to build the list of my broker network, right? People I want to reach out to. I'd send them blanket emails like, hey, looking for a deal, new to the area. I was dead honest with them about what we were doing. But hey, if we have investors, we have people that are willing to work with us. If you bring us deals, I promise you you'll get some feedback. And if it works out, then we'll buy it. And it got to a point, Michael, where I couldn't keep up with the phone calls I was getting from them anymore. And people always ask me, Barry likes to joke about it. He's told us in the past that he's had students that tell him on calls, hey, the students will say, we can't, we're just not getting any deal flow. We're not, the brokers aren't calling us back, et cetera. He goes, man, I've got a guy in Texas right now that can't keep these people from calling him because I joke about it, and it's my wife wants to kill me when I say this, but I tell them I'm like a bad ex-girlfriend. I will not leave them alone. I constantly am calling them. I'm keeping in the loop. I mean, just before we got on this webinar with you, Mike, I was on the phone with a broker for a deal that we put an offer in on in north of Houston. Just touching base with him. Hey, how's it going? Are you ready to sell me the deal yet? Stop messing around. Um, you know, and that kind of dialogue with him, it seems to really resonate well. They enjoy talking with me. They always call and shoot the BS with me just to have fun because I'm open and I'm honest with them. But to finish that question because got off on a tangent. My days typically I'll start in the mornings with a workout, then I try to hit at least one deal a day in the morning before I go to work where I can underwrite it, do a 10-minute eval on it, or dive into the numbers a little bit more if I need to. During the workday at lunch, Ron and I at times will meet and have basically lunch work meetings where we set aside a location where we meet and we'll go through some things for our side of the business, what we want to look at or what we want to improve upon. If not, I'm typically during my lunchtime, which is a free 30 minutes, trying to go through OMs, et cetera, emailing back brokers, underwriting deals. In the evenings, I don't have the energy. I have a 3 and a 6 year old. When I get home, it's on fire around my house. And we have a lot of fun, but typically by 9 o'clock, there's nothing left of me. I usually go to bed pretty early just so I can start again at 3:45 the next morning and do the same thing. But Ryan mentioned you have to put the time in, and that's the one thing that we've both tried to make sure that we do is continue to focus on, for me, the broker relationships, constant communication with them, and underwriting deals, and then sending in the LOIs, right? So I'll send in LOIs for numbers that are far below their asking price, and sometimes they'll come back and say, "Hey, that sounds good. Definitely send that in," and it'll throw me for a loop. That happened today also. So.
Now, Ryan, you as a capital raiser, you guys raised $2.1 million, which is a lot to raise for a deal. So while
Mhm.
Russ is talking to brokers on deal flow, what is your activity like?
Yeah. So newsletters, more newsletters, constant communication with either the active investors or potential investors. It's kind of, the way we started it, and not to get too far into the deal, we did the 506B where it's family and friends, previous relationships, right? And we knew we needed to start there anyways. We didn't have a track record to be able to solicit just accredited investors off the street that didn't know who we were. So, uh, you know, just talking to anybody that already knew me, kind of bringing up real estate, talking to them, educating them. I think education's a really big part of it, and that's something, again, that's rewarding part of this experience. I mean, the audience on the webinar, I mean, they're here because they want to learn more, right? And I think that's from our perspective or from mine, definitely is to just educate. And my ideal scenario is we have somebody that invests in our deal and is involved enough to learn about either your program or how to do a deal themselves or find something or evaluate it to where they become a GP, right? And now we can invest in their deals. I think one of the best steps for sure that Russ and I have both taken is invest in other deals and see and get to be a part of how they communicate, what they do for their investors, learn best practices. But yeah, so the combination of all those things is how I help, nurture investors, continuously, develop things that kind of don't happen by themselves in the background, whether that be the website, drafting up informative newsletters, not just updates on existing, deals that people are involved in. But yeah, that's kind of what I'm doing.
Yeah. Well, let's talk about that first deal, Russ. How did you come about with that deal?
And long story short, I've probably underwritten over 200 multifamily deals, and I wasn't coming up with anything. The market was bad. It was a tough time for that. Some of the deals that I knew that were going across, I was being told by the brokers, hey, this group came in with 80% down payment, et cetera. They're just parking money in places. So after several months of doing that and having to put it down every once in a while for a few days just to kind of get my mind back wrapped around it, one day I just decided, you know what, I've always liked storage. I've always thought um, that there were some opportunities with it. So I just started underwriting some storage deals. Why not take a break from multifamily? The process is the same as far as from the underwriting tool. The expenses are obviously different, but the concept is there. It's the same. So I started underwriting deals and I got through about probably 25 or 30 deals where the deal that we ended up buying popped up. And I thought, oh, that looks interesting, and it was semi off market. When I say that, like they sent it to me and then like 12 hours later put it on the market. But I had a chance to immediately get in front of it, and it's the only deal that I've ever underwritten that came up with every single number that we could fathom, touching in the green as far as being in the clear for the minimum expectations we wanted for returns, cash on cash return, refinance, return to our investors. It checked out perfectly. So we put in an offer. And then about 3, 4 days later, I got a call from the broker like, hey, seller liked your offer, but somebody came in about a $500,000 more than you did. And I happened to be at work with my computer up, and I had my SDA, my underwriting tool up in front of me. So I clicked, I mean, I knew what my offer was, so I added $500,000 to it real quick. And I looked at it and I said, hey, bud, so I'll tell you what, man, whenever your buyer tries to retrade or backs out of your deal, I want you to call me first. And he said, wow, he started laughing. He said, why would he do that? And I said, because right now, based on what I'm looking at, his returns are 0.01% at that price. And he said, all right, man, well, hey, I appreciate it. I've got something coming down the line for you, closer to where we live. I'll get back with you pretty soon on that. I'm like, all right, man, well, I'll hire you later. Got the phone, and no kidding, a month later, he called me back. He said, hey, man, I don't know how you did that, but they backed out of the deal. Are you interested in it? Does your offer still stand? And well, long story short, it stood, and we were able to execute the deal. So.
Yeah, that's amazing. And that's a lesson here where you speak confidently to the broker, number one, but number two, you stay in touch with those deals. I'd say probably like almost half of our deals are just like that. Stay in touch with the broker, fell through, and then you get it. Now, so once you have it on a contract, or even before, Ryan, how did you then go about raising the money?
Yeah, not to really downplay the effort that went into getting it to that, point, but we had started talking to potential investors, gosh, 2 or 3 months before, just kind of funneling them in, showing them a sample deal package, saying if we hit this number, can I just tell you about the benefits of investing with us or in real estate in general? Going over the benefits of the depreciation, the interest write-offs, the that appreciation and the value of the property over time. So we had a pretty good list of potential investors going already. And what kept me up at night, honestly, was when we did have it in contract finally, because then it's like, okay, you have probably 30 days of due diligence where you can make up a reason to back out, sure, but you also don't want to go ahead and actually wire money to have your investors wire money to, some bank account, meaning it's leaving their account, like actually leaving their account into the investment account until, maybe 2 weeks before closing, because time is money. They don't get to invest that on their own, and when it's with you, it's just sitting there unless you've closed on the deal. So in my mind, it's like, how do I tell these people, like, I don't know if I'll ever want to talk to them again if they don't follow through with what they say they're going to do, because it's about the call. If it would have fell through after earnest, after the money goes hard, I mean, on a $4.6 million deal, we're out $46,000 at that point, right? Well, that's a huge hit. So that's what kept me up. It was how do I know that they're going to follow through? But it really, for this particular deal, it just came down to talking with them, keeping them up to date, making sure they felt comfortable with it, and going, when it came time to open up, we use cash flow portal. When it came time to open up that investor portal, it wasn't maybe 3 or 4 days, and we had already had $1.5 million wired.
It's like one of those things where it's, without much effort, you raise millions in days. But what you said earlier is you've already been seasoning and talking to these people
Yeah.
with a sample deal package months before. And I think that really is the key to raising capital. If you hadn't done that, I don't know if you would have closed the deal. It would have
Right.
been.
Yeah, I mean, yeah, I would have had a heart attack or something for sure, just because of the stress. Yeah.
It's pretty cool. What else you want to say about this deal? It's just impressive what you guys did there.
Yeah. I'm not sure Russ has a lot to say about it. I credit him for this one, just by the way, he's kind of stuck with the broker. But it really, this was a sweet deal just because of the seller financing. Just somebody ready to kind of ride off into the sunset finally. Somebody that followed the real estate investment roadmap, right? And he was just ready to be done. And we happened to be in the right place and talking to the right broker. Um, and so seller financed at 6%. You couldn't beat that with any private equity or bank at the time. Um, Pretty much fully, yeah, it's probably, I think it was 98% occupied, something like that. So full occupancy. We knew the market well. We close enough to the area to understand the attractiveness and the market. So all of those things make it a very, very good deal.
Can you share kind of the returns that you two are getting, like acquisition fees or cash flow or anything like that? Do you guys remember that from the model?
So percentage wise, we did 2.5% um, acquisition fee and 2.5% asset management fee, and then 1% capital transaction. So in refinance, it's 1% or sale. But the asset management part is really valuable because, one, you look at it like it's payment for your time you spend managing the deal, which we're very active in doing. But two, if you do it right, it allows you to go ahead and start to grow your team. So you can go find a VA or start to hire some staff to help you generate more deals, or cover, the administrative aspects of having a deal under your, an active deal, and going and finding more, or paying attention to other investors, right? Um, Actual numbers. So the acquisition fee turned out to be $115,000. So we split that. So it was a nice check at closing for each of us. I had my financial planner asked what the heck happened, like where'd that come from?
It's all.
Like that wasn't in the plan. I said, I don't know, so that was it. You experience that once, and the deal of the first, or the law of the first deal, kicks in no matter what, I think. But that is definitely an extra gallon of fuel, right? To say, well, if I did that, if I did a deal, granted, you don't just do them because you want the acquisition fee. You constantly have the investor's best interest in mind. I mean, that's first and foremost all the time, because I don't think there's anybody, certainly on this webinar or in the syndication business, that's successful, that doesn't think that way. Because if it doesn't, if you don't lose a little bit of sleep over, using other people's money to try to make them money, but you're responsible for it, you might be in the wrong business, or you may not survive very long because you're not going to have investors, right?
So, Russ, what's next for you guys? I know you guys are currently planning on your, plan for world domination, but what are you guys thinking right now? What's next? What's some of your goals over the next year or so?
And Mike, we're pretty busy. I've currently got, LOIs in on a couple deals. I've got one that's going to be pretty sticky. I think I have a strong feeling of. Got a broker today that asked me to send one in for another one. We're in the process, the engineering design phase right now for building a 40,000 square foot storage facility near our hometown in an area that is extremely undersupplied. So we're very excited about that because we're able actually to build it on some old family property of mine, so we don't have to actually buy the land. So that deal alone in itself is taking up a little bit of our time. I was on the phone with a family member this morning that's helped managing some of the engineering process about environmental studies and such. But we're expecting a full design to come back to us within the next week. We'll have that to the contractor by the week after next, hopefully, and then hopefully be signing contracts and start raising money to break ground on that very soon. So we've got strong deal flow. I wish that I could keep up with the brokers as much as they still call me. We actually did have to bring on somebody to help us with that. We brought in a gentleman named Michael Spear that's been a godsend helping us on the multifamily side. So he's been enjoying the spoils of some of my old phone calls and buddies calling him now. But he's currently underwriting multifamily for us, and that's kind of taking a big load off of me to where I can kind of focus on the storage side. We're also executing a value add strategy on our deal, the Rockport the storage deal. We added 38 new spots, open parking areas there. And we've also we're looking into adding another 8 covered parking spots there as well that will substantially increase the value of the property by significant amounts.
That's awesome. Ryan, what are your thoughts about where you guys are going with the business?
Well, I mean, we're now partaking in the Dealmaker Elite program, so we're continuing on, our partnership with you, and feeling more and more like family every day, which is great. So for me, it's setting that foundation for growth with, this next portion of of what I would call, I mean, it's a program, but it feels more like just partnering and growing and learning from your experiences. And then for me, it's scaling the business now. It's what steps are next for being able to make this repeatable exponentially. That kind of thing.
That's exciting. This is to me, this lights me up. Yes, getting into first deal is very exciting, but now it can be done. And now what's interesting is what can be done. Like what's the potential, and the potential is enormous. So I'm glad you guys are continuing to work with us, and we're going to help you scale that too. Well, however large you want to do that. So Ryan, where can people find out more about you guys and connect with you?
So they can go to Sable Capital, so SABLE Capital, CAPITALTX.com /contact, or just go to the website and you'll see plenty of places to sign up for the newsletter. Or if you're kind of already wanting to get into real estate, either learn more about it, potentially partner with us, or invest in our deals, you can sign up as an investor as well and put even more information on there, and we'll be reaching out, or you can schedule a call.
Awesome. So that's sablecapitaltx.com. So check out Ryan and Russ. Hey, thanks so much for being on the show today.
Yeah, thanks for having us, Michael. Appreciate you and everything you've done for us, and look forward to what's to come.